What is going on, guys? Welcome back to another video, and today we are going to be discussing ELF stock. Now, listen, before we get into the analysis on the stock and its price, a lot of people are going to say, ELF, that's a women's beauty brand, and a lot of people that watch my videos and a lot of people that invest in the stock market are going to be males, and they're like, I don't want to invest in some beauty brand. Listen. Just because you invest in something doesn't mean you're going to use it. A lot of people invest in AI stocks, or I guess you could be using Claude or Gemini or something, but are you directly using a lot of the products that they're selling? No. But if you look at Elf, in that case, your sister, your mother, your girlfriend, your wife, they're probably using it and they're going to be spending a lot of your money on those products. So don't just shut the idea automatically just because it's something that you don't necessarily use, because a lot of people, as we'll talk about, are using ELF and their brand. So without further ado, let's get into the video. So, business model. What do they sell? They sell cheap, high quality products. And what this does is it's pretty much makes them immune to price increases. You'd think that they'd have a terrible time going on because of the tariffs, and obviously the stock reacted kind of quite negatively to that. But if you actually look at the company, they've been doing just fine. If they have to go up on price, their products is still going to be the cheapest product on the shelf, and everybody is still going to buy it. So that's a really good thing they have going. They do also have a few higher end products, which they've been acquiring other companies for, and we'll discuss that later on. But most of their products are still cheap, high quality. So they have massive online and retail presence. They're in places like Target, Walmart, Ultra Beauty, and they have insane marketing. We'll talk about that later on as well, but really, really good marketing team. Pretty much all of Gen Z uses their products in some way, but exceptional job management has done with the marketing. And the core brands of the company are Elf, Well People, Notorium, and Rhode. So I just want to talk a little bit about Rhode specifically. So they acquired Rhode a little while ago, and it generated over 390 million in net sales in the first year. It drove up quarter net sales up 13 to 34%, depending on which quarter you look at. The direct consumer sales record happened when Rhode was dropping some of their limited time stuff, 27 million just in that one day. And Rhode is just really, really popular, and their stuff pretty much sell out. There's like wait lists for the drops and everything. It's if any of you guys were sneakerheads back in like 2020, it's like for all the drops on Nike sneakers or Adidas with the Yeezy or whatever it was, everyone's lined up and it sells out instantly. That's what it is for this. And they have high repurchase or high repeat purchases from customers of over 70% higher than their other products. And they also have higher gross margin on Rhode products. And it pushed Elf's corporate margins to 70 to 80% plus. Another thing that Rhode has done for the company is it has unlocked Sephora and other higher end retailers and higher end customers, because Elf's other products are too cheap to sell in Sephora, but Rhode allows them in to basically a whole nother customer that they didn't have before. The growth from Rhode has also managed to balance out some of the damage that was inflicted by the tariffs. And another thing that is pretty big about Rhode is that it's very big internationally. So this expands ELF into international markets without them actually having to put a ton of money into advertising and this and that, because they acquired the brand, so it was already there for them. The higher average order value from products also helps cut down on shipping ever so slightly when people buy Rhode products, but that's kind of irrelevant. Significant catalyst for Elf in general. Obviously, we talked about Rhode. They also have other brands. They have Notorium, a few other ones, but Rhode is pretty much the main one behind Elf, and then I'd say Notorium matters a bit, and the other ones are less significant. They can always steal shelf space and expand in Sephora, Walmart, Target, etc. Pretty much more and more people are buying Elf, and they're just consistently gaining more and more shelf space because they're replacing older brands that not many people buy anymore, basically, because The retailers are going to want to have the most people buy, or sorry, the retailers are going to want to stock the most of what most people are buying. So as more and more people continue to buy more and more of Elf's products, the retailer is going to give them more and more shelf space, which is kind of like a little flywheel where it just keeps on going. Sorry about the little confusion, but like I said before, international expansion, their pricing power mode I talked about, and just continue execution from management. Look at finances, total revenue of 1 billion. They have revenue growth up 25 to 50% quarter over quarter, and this is the highest among any consumer beauty or anything basically in the space. 65 to 70% gross margins, which are very strong, and their EBITDA is around 20 to 25%. This is because of their heavy reinvestment through ads, and I'm fine with this. They're going to continue to do this, and they're continuing to execute, and I think they're going to continue to execute. So as long as they do that, I'm fine with it. Trailing PE for the stock is 50 to 70, and the forward PE is 30 to 40. And the reason it's higher is because most of the other traditional companies in this space, in this sector, trade at 20-ish, but you have to keep in mind they have low single-digit growth, while Elf is doing a lot more than that, so I think the premium is very much warranted for that. Onto management, the CEO, Tarang Amin, has led the company from basically being nothing, sold in like dollar stores, to pretty much the most exciting, or not even pretty much, the most exciting beauty company today. If you look across the whole space, the most exciting, most well set up is going to be Elf. As for the rest of management and their execution, they have consistently executed pretty much across every single measure over the past few years. And I just want to point it out once again, marketing. Whew, amazing job from management in that. They consistently beat and raise pretty much every quarter. Wall Street loves that, and overall, they're just very trustworthy, and they've executed in the past, present, and I believe they will in the future as well. On to my final decision, as well as the stock price, my price targets. Listen, bear case, P gets pulled down towards 25x because the execution isn't best, which causes top line growth and margin expansion to slow down. And worst case scenario, it performs in line with the market around 50% year over year returns. And this number over here for all of these are going to be for the next 5-ish years. Obviously, I think a lot more growth is happening in the sooner years rather than later years. So take that into mind. For the base case, P goes down to 30 to 35x because execution is solid. It doesn't blow anyone away, but it's pretty good, and this would cause revenue growth to normalize, and 25 to 35% year-over-year returns would be warranted in that case. And bull case, which is what I think is most likely to happen, international growth continues, brand continues to execute across all fronts, P stays where it's at, and you get 40 to 50% returns year-over-year on your money, which is an extraordinary opportunity. Obviously, if you bought the stock a little while ago, you would have already made 100%. I believe I'm up around 50%, maybe 60% on my position in Elf. I had some in the past, so I was dollar cost averaging over here, but in the lows, it was just under $50, and now it's pushing towards 100. And I think for end of year, my price target would be around 120-ish. I think is fair, maybe a bit higher. I think 120 to 140 actually be a good price target for end of the year. And then over the next two years, I think we're going back up to all-time highs, and then from there, pushing back through. So in the end, I think the stock is a good buy today. It's been a good buy for a very long time, and I think it's going to continue to remain a good buy. I think management is going to continue to execute, and I think it's a great stock to be in, as well as you have to take into account you want to diversify your portfolio. You don't want to just hold tech stocks, AI stocks. So I think a stock like this is still going to be a high growth stock with minimal risk that provides extra diversification for your portfolio, which I think is very important. So thank you guys so much for listening. Let me know your thoughts down below. And also, if you guys like this kind of content, you can drop a subscribe, hit the like button, and leave me a comment with a stock that you would like me to do an analysis on next, and I'll feature you guys in my next video. All right, thank you guys so much for watching, and have a great day.